Are you representing a client that's buying a condo, or are you a listing agent selling a condo in South Florida? This is what you need to know. In Florida, condos have very specific guidelines, different from any other state in the country. So it's very important to know what you're getting into, whether you're representing a seller selling a condo or representing a buyer buying a condo in South Florida. So primarily, there's two different ways to finance a condo. One is through what's called a full review process, and one is called a limited review process. So a full review process, basically what that means is that we're going to reach out to the condominium. We're going to get a copy of their budget, their balance sheet, all their financials. We're going to verify if they're in litigation or not. We're going to check all their insurances. And we're going to send them a 6-page condo questionnaire form that they have to fill out. Now, typically they will charge the client anywhere from $100 to upwards of $700 to fill out this form. It also takes a lot of times 7 to 10 days to get it back. So in that form, there's a bunch of things that really can go wrong in getting the condo passing a full review. So it's very important that we unpack all of that. A limited review is just like what it's called, a limited review. There's no form, there's no cost to the borrower. We just verify really two things. Are they in litigation and their insurance? And that's it. So what's the difference in financing between a full review and a limited review? So under a full review, if you are a primary residence purchaser and you're a first-time home buyer, as an example, you can do as little as 3% down. If you're a primary residence purchaser and maybe you've owned a home in the last 3 years, you can do 5%. Second home, 10%. Investment property, 20%. So that would be for a full review. On a limited review, however, since we're not verifying all that documentation, as a primary residence, you have to put 25% down, a second home, 30%, and an investment property, 30%. So in the case where we got to close a condo very fast, a lot of times we try to go limited review, obviously, because we don't have to wait for all this documentation back from the condo. But if you have a client or if you're a listing agent that's getting an offer with less than 25% down, then you got to start thinking, okay, timeframes. How long do we need for financing contingency? How long do we need for closing? Because we got to go full review. So the main difference between a limited and full review a lot of times comes down to the annual budget of the association. So the very first thing that we do when we have a client looking to purchase in a specific community is we look at the budget. If you're a listing agent listing a condo, look at the budget. If you're a buyer's agent, ask for the budget. A lot of times you can't get it from the association. You have to get it from the seller of the property. So what do we look for in a budget? Well, it's pretty simple. If you look at the 2021 approved budget, you want to locate the maintenance fee income, the total maintenance fee income, not other income, just the maintenance fee income. So in this case, we're going to look at this budget here. It has $918,565. So what we want to do is we want to look down through the budget and locate an item or a line item that says reserves. And what we're looking for is 10%. So we want to make sure that there's a line item for at least $91,856. So as looking through this budget, if we go down to the very bottom, there is a section called reserves, and they have $180,000 in there. So as you can see, they have more than 10%, almost 20%. So in this case, it would pass a full review based on the budget. So anytime you're looking at a budget, look for those two items, and that will determine if it can pass a full review based on the budget. Now, keep in mind, there's that kind of questionnaire form with a million other questions on it. So there's a lot of other things that happen under a full review, but I would say 90% of the time it comes down to this budget. So make sure they have 10%. One question I get from a lot of agents is, oh, well, the condo has $1 million in reserves in the bank, but they're not budgeting for reserves. It doesn't matter. Fannie Mae and Freddie Mac require a budgeted line item for reserves. It doesn't matter how much you have in the balance sheet. Something to think about. So listen, if you have any questions on a full review versus a limited review or anything on a budget, or if you want us just to review a budget, email us, connect with us. We'd love to talk to you. Have a great day. We'll talk to you soon. Bye-bye.